This one strategy beat 99% of Wall Street investors, institutions, and hedge funds, not just in 1 year, but over the last 5. It's now being rapidly adopted by massive public companies to turn themselves around and outperform the rest of the market. And no, it wasn't cooked up in some Wall Street boardroom. It's been hiding in plain sight this whole time. Now, while the so-called smartest money managers were busy diversifying and hedging and fee charging their way to mediocrity, this one strategy helped companies obliterate their returns. And now the rest of Wall Street is scrambling to copy it. Companies on the brink of collapse are suddenly thriving because they made this one move. But here's the twist. You don't need to be a billionaire, a CEO to run a fund to use it. You can start using this strategy right now, today. Now, real quick, I'm Mark Moss. I've built and exited multiple tech companies, invested through boom and bust cycles, and today I'm a partner at a leading Bitcoin venture capital fund, an advisor to multiple public tech companies. I write the Quantum Wave Investment Report, where I help investors stay ahead of the biggest shifts in tech and money. And I make these videos to share the strategies that we're using so you can profit as the rest of the world is trying to catch up. Now, in this video, I'm going to show you exactly what this strategy is, how it saved companies like MicroStrategy and now GameStop, and how you can apply it to your own portfolio to beat the market, and even the pros without ever handing your money to Wall Street again. So let's go. All right, so we're jumping right in, and we're going to show you how to obliterate Wall Street's returns. So you never have to give Wall Street your money again, and you can outperform them with just a very few simple moves. But before we do that, why would you never want to give Wall Street your money again? Well, that's Wall Street's dirty little secret. And the secret is that they don't really make you any money when you think about the long-term perspective and not beating the rate of what the government tells us inflation is, but the real rate of debasement, about 10 to 12%. So if we look at this, we can see the average hedge fund, these are the guys making the big money, the average hedge fund on Wall Street doesn't make as much money as you think they do. We can see the net returns for hedge funds have decreased from 18% per year. 18% is not bad. That is more than the 10 to 12% of monetary debasement we've been seeing. 18% not bad. However, they decreased from that in the 90s to 8% during this last decade. So over the last decade, we're not looking at our returns in a month or even a year. Let's look at multiple years. In the last decade, we're talking 8%. Now, that's a problem, especially when you think about the fees that are charged, the taxes that are charged. And if we look at it comparative to other options that you have, like, for example, the S&P 500, you could just buy the index, you can see that the Barclays Hedge Fund Index right here shows minimal returns compared to the returns you could have just for buying the S&P 500 index. Now, of course, there's ways to beat that, but for right now, just for comparison's sake, Wall Street, their institutions, their 401ks, their mutual funds, their hedge funds, they're all looking like this. That's the dirty little secret. Now, on top of that, your advisor for your mutual fund, your 401k, whatever, or your financial advisor telling you to diversify, or what I call diversify. And when we look at this, part of the reason why is because we've had this passive investing that's sort of taken over Wall Street. What is passive investing? That means that, every 2 weeks you get your paycheck, a little bit goes out and goes into your mutual fund, your 401k account, and that is passively being invested. And what happens is it invests through the index, like the S&P 500 index or the NASDAQ index, and it goes to the companies in that index. But the problem is that we have the Mag 7, the top 7 stocks, and you can see their performance has gone up while the rest of the S&P 500 has stayed about flat. This chart is for about the first half of last year, and we can see if you take out the Mag 7, you're about 1.25%, but the Mag 7 did 35%. And so when you look at that and you understand what's going on, and then, like I said, you add in the fees that they charge you, and then you add in the taxes that you're going to have to pay, the returns don't look so good. But this is also why, if you're a publicly traded company and not in the Mag 7, it's very difficult to grow, because the passive funds are driving the Mag 7 up because of the weighting in the index, and all the other public companies are falling behind. So let's take a look at a couple of the public companies, what they're doing to get ahead, and then we'll figure out how you and I can also use this to get ahead. Okay, so we're talking about MicroStrategy, a company that, of course, you know about by now. I talk about it quite often. And they changed the game. As a matter of fact, what we're saying is they found the cheat code. The cheat code to how do we beat Wall Street in a game that's fixed because of the passive investing and the way the Mag 7s work. And so basically, the story of MicroStrategy is it was an old stagnant company. When I say it's old stagnant, they're a software company. They weren't growing. They're competing against the likes of Microsoft, and so it's very difficult to grow in that market. And so they had a good customer base. They had good cash flows, but they weren't growing. But they had about $500 million of cash. Remember that. We're going to talk about why that's important. So they had a big stockpile of cash. Michael Saylor, the CEO of MicroStrategy, thought, shoot, what are we going to do? We could reinvest it to try to grow the company more, but that's probably not going to work because of our competition. As long as we hold it in dollars, it's losing value. So where should we put it? All the options that we have: grow the company, buy bonds, treasuries, etc. And he decided to pivot and said, we looked at Bitcoin, and we think adopting a Bitcoin strategy will be the way for us to have a cheat code and win over Wall Street. So they did, they pivoted. And since that time, that was in 2020, Michael Saylor and MicroStrategy announced that.
I want to take a break real quick and just say that there's only so much you can learn through videos. Yeah, build your knowledge, build your skills, but you need to build your relationships. Relationships plus skills equals money. So come build your relationships and your knowledge at the Bitcoin Conference, May 27th through 29th in Las Vegas. I'm going to be there speaking for the 4th year in a row, and lots of other people way bigger than me. Entertainment, politics, media, finance, you name it, they'll be there. So come check it out. Save some money with my code MarkMoss, or I'll put a link down below. If you use my code to save some money, I'm going to do a private meetup just for you and some of my friends. So let me know. Use that code, save some money, send me a message, and we'll get you in the private meetup, and I hope to see you in Las Vegas.
They have now, as of about a week ago, hold now over 500,000 Bitcoin that they bought with cash. They bought through raising debt instruments. I've broken this down before. I'm not going to go deep into that. The recent $584 million of purchases. And so now they have over 500,000 Bitcoin. Now, MicroStrategy has now changed its name to Strategy. And we're going to talk more about that in a second. But we can see here, since they adopted this cheat code, this Bitcoin strategy in 2020, you can see their performance is up 2,359% compared to NVIDIA, everyone's darling, is only up 958%. Not only, it's massive, 958%. Bitcoin by itself, amazing, 623%. So NVIDIA has outpaced Bitcoin, but Michael Saylor, MicroStrategy's outpaced that. Tesla, 163%, Meta, Google, Apple, Microsoft, and gold. So you can see over this period, since they've adopted the strategy, the cheat code strategy, they have outperformed everything else. And so now, as I said, they have changed their name from MicroStrategy to Strategy. We can see that Michael Saylor's $200 trillion Bitcoin strategy is now working with the government. We've done videos on that. If you want more videos breaking down the U.S. government and how they're using Bitcoin, leave me a comment down below. But the important part that we're going to talk about in this video is the strategy, because other people are adopting it, and we can too. But basically now they have the strategy, and they're showing the strategy to other corporations, to the government. Michael Saylor's in D.C. meeting with the government, but also corporations. As a matter of fact, they have a big meeting coming up, strategy for corporations, where they're showing them how to do the same thing, how they can obliterate Wall Street, how they can obliterate the returns of any other publicly traded company. Okay, now since they've done that, of course, in a competitive landscape, it's no surprise that other companies want to do the same thing. That's what's happening. It's what we call game theory, right? If other people are getting ahead, I need to do the same things to beat them. And so adopting the game theory, pun intended, we have the next company called GameStop. Now, you've probably heard about GameStop, stock GME. It's kind of like a meme stock. It was Roaring Kitty doing the trades against them. We saw it go up in those Reddit chat rooms and so forth. And GameStop basically has a dying business, similar to what MicroStrategy was. The business isn't really doing good. The stock is pumped because of the meme stock and what was happening in the message boards and whatnot. But it's sort of a dying retail business. It's a brick and mortar business. It's going away. But they have a lot of cash. Remember that. We're going to come back to that. So just like MicroStrategy, sort of a stalled out, failing business, but a big stockpile of cash. So what should they do? Well, we need to protect the amount of cash that we have and think of a way to get our stock to grow again, even though our business is sort of dying and we don't want to reinvest into a dying business like brick and mortar retail. And so enter the latest game theory adoption from the company called GameStop. They're raising $1.3 billion via convertible debt to what? To buy Bitcoin. That is the strategy. That's the strategy. Certainly take some of that cash and buy Bitcoin. MicroStrategy did that. But then the next levels are, how do we lever up debt to buy even more? And so that's exactly what they announced, $1.3 billion for Bitcoin. Now, lots and lots of news around this. Some people are saying, well, shoot, as much cash as they have, they could send the GameStop stock up to $100, and they could turn this into a $13 billion hedge fund because they have so much cash. They're dwarfing where MicroStrategy was. And so they could take the strategy and multiply it way, way faster if they did that. Now, at the time of this recording, GameStop went up and then the stock came back down. But again, don't look at your portfolio in days or weeks or months. Think a little bit longer term what this means. Now, why was GameStop an ideal fit for this, to do this, and how would other people like you and I think about this strategy moving forward? Well, number one, they were a natural fit because they had this unique capital structure, all right, which basically meant their investor base and their operational profile sort of allowed them. What do I mean by that? Well, number one, their capital structure is that they had high liquidity. Again, they were sitting on a large amount of cash, a melting ice cube, $4.78 billion of cash that was losing value every single day. They had that in cash and cash equivalents. Okay, so their balance sheet was like, what do we do with this money? How do we retain it? But then also, they have this resilient investor base. You see, you have to get the investors, the equity owners, to go along with this. Now, a lot of companies, they're old, they're stodgy, they're sort of in their main business. They don't want to go into something like Bitcoin. But with GameStop, most of these people already know it's a failing business. They're already in games. They're already knowing that it's a meme stock, and they're just kind of like, whatever. So they go along with it, right? They've already demonstrated long-term conviction and willingness to support unorthodox but calculated strategies. That's how they've got their stock back up now. Also, because of GameStop's embrace of this decentralized technology, it aligns with their identity as this outlier, right? They're not like the rest of Wall Street. They're different, and so adopting Bitcoin sort of fits into that. Now, this worked for GameStop. It doesn't mean that it's a fit for every single public company. These are the reasons why it worked for GameStop, all right? Now, the stock did pop, but like I said, it went back down. But really, if we think about it, back to MicroStrategy, back to GameStop, they did it to survive. They were stalled out or failing businesses with large amounts of cash. And what do we do to stay alive? Well, let's buy Bitcoin. Now think about that in your own portfolio, and how are your own assets going, your own investments going towards your ultimate goal of retirement one day? Are you barely making it, like GameStop and MicroStrategy, and do you need to do something to adopt a new strategy to get ahead? Okay, now because of that, because of the precedent that's been set, because of MicroStrategy, or now strategy, outpacing everybody else, the game theory says more people want to do it. But even more than that, we can expect more companies to do this because the government changed a rule. Now, we've been talking about this for a while, talked about it multiple times, and this is an accounting rule, and it gave new clarity, all right? So this is the way that they can hold it. This happened just in late 2024, so this just happened last quarter, and now these are big corporations, it takes time, but we're now starting to see them wanting to use these new rule changes to move into something like this. Now, what is this rule change we're talking about? Again, I've covered it before, but we're talking about under old, what we call legacy accounting standards, we call it GAAP, G-A-A-P, generally accepted accounting principles. Under that, they couldn't do this, but this barrier was removed in 2024. And it's the FSAB, Financial Accounting Standards Board, approved new rules that now allows companies, public companies, to measure Bitcoin at fair market value. Because now they can measure it at fair market value, it allows them to benefit from the profits or the losses on that. So now companies can reflect both unrealized gains and unrealized losses in their earnings. They can report Bitcoin more transparently in their financial statements. So now they can reap the benefits of actually doing this. Before they couldn't, so why take the risk? But now they can reap the benefits, we'll see more companies doing this. This brings Bitcoin into compliance, which public companies need to be in compliance because of all the SEC regulations there, but for responsible treasury management, okay? So this is a big rule, and this is why we've already seen more companies doing this and why we're going to continue to see this trend change. All right, now, this isn't just for corporations. This is for you and I. If, again, our portfolios have stalled out, if we're not getting to our goals, if we look like a MicroStrategy or we look like a GameStop, we might want to adopt the cheat code as well. So what would we do? Well, kind of the same thing. What's our treasury? How much assets do we have? And are they performing and keeping up with the rate of monetary debasement? And just like Michael Saylor did, what other options do we have for those assets, and how should we think about restructuring those? So number one, we should certainly be buying and holding Bitcoin long term. Again, not on a weekly or monthly basis. Think over multiple years like MicroStrategy does. So we want to be buying and holding that long term. Now, look, all your arguments are gone now, right? It's already faster and cheaper and more private than any other cryptocurrency. It's not going to be illegal. The U.S. government adopted it. You have the smartest guys in the world using it. Like, the excuses are sort of gone at this point. Now, if we really want to get smart, like a MicroStrategy or like a GameStop, and use the strategy, then we want to think about the asset and how do we add velocity. You see, most people don't have a money problem. They have a speed problem. So for example, over the next 20 years, you might make $1 million. Well, $1 million over 20 years isn't that much money. But what if you made $1 million in 5 years? What if you made $1 million in 1 year? What if you made $1 million in 1 month? And that's the velocity thing. So how do we add velocity? Well, just like MicroStrategy, just like GameStop is doing, by adding debt. So for example, we can borrow against our Bitcoin, which is now tax-free liquidity, and we can use that tax-free liquidity for other things to make more money. One, we could leverage it back into Bitcoin. So we could lever up our Bitcoin account, number one. We could use it to invest into real estate or other types of yield assets. So I have Bitcoin that's, Warren Buffett calls a non-productive asset, but I could put it into a productive asset that yields cash flow. Number two, I could sell options against it. I could roll options, covered calls, to produce income for me that way. I could use it to put into a tax advantage structure. So for example, I could borrow against it tax-free, and then I could buy tax write-offs, put that into real estate or other capital equipment that now gets me write-offs so I don't have to pay taxes on the other income that I make. And so this is how we add it up. Now, each one of these probably needs its own strategy. If you want me to break these down into individual videos, leave me a comment down below which one you want me to break down, and we'll put that in another video. Okay, now the key here is that we have to start thinking about ourselves like a company, like a corporation, like a fund. Now in the old days, Wall Street was too complex. There's millions of different stock options to choose from, and Ray Dalio says I have to invest in 15 different things, and I'll just give my money to somebody else to manage for me. But the key is today is we don't need all that complexity. Today, you can become your own fund. We can beat Wall Street, we can beat all the institutions, we can beat all the hedge funds by making 1 or 2 or 3 very simple moves. Now we can have sovereign wealth. We can control this on our own, not getting taxed and feed from Wall Street. We can have it on our own, and that's much greater than having someone else manage our wealth. We can keep total control instead of dealing with the complexity of what Wall Street does. And we can have real returns where we're actually beating both inflation and the rate of monetary debasement and every other asset out there, as opposed to just dealing with the Wall Street reputation. Really, today, you don't need to hand your money to Wall Street because you can be the fund now using the strategy. It's so simple. Anyone can do it. Let me know what you think about this. Leave me a comment down below. If you want to know more about why Bitcoin right now and the other assets that are beating it, you might want to watch this video right here. And that's what I got. All right. To your success. I'm out.